Hello, this is Pat Walker, Mission Winners, doing a training coaching video for everybody. Here's a fact, not an opinion, a fact. A major portion of a stock price's movement is related to the industry and the sector that it's in. If you want to increase your potential of making money, focus on leading sectors and avoid lagging sectors. One of the best ways we can find out what are leading and or lagging sectors, just scan the ETFs, the sector ETFs. It'll tell you a lot of what you need to know. And you don't need to look at 40 different, and that's an exaggeration, 40 different ETFs in the same sector. One or two will tell you what you need to know. So let's do it. Here's biotechnology. This is a daily chart. The purple line is the 200-day. The green line is the 50-day. The blue line is the 21 exponential. And the yellow line is the 8-period exponential. And you've got price and corresponding volume. This is a daily chart, and this is biotechnology. And as you can see, it's below all the moving averages lines. There's nothing there. Just leave it alone. Here's an investing maxim that will help you. Focus on stocks that are above the 200-day or ETFs above the 200-day. Focus on ETFs and stocks, preferably above the rising 50-day. It'll just make it easier for you. So nothing here. Continue on. Cloud computing. It's below all the moving averages. Oh, this is a big bounce. Look at all the overhead supply. For those that don't know, I'd like to explain what this is. Overhead supply, this is where people own the stock higher in price, like up here, and when it gets close to their price, what do most people do? You know it. If you own a stock at 20 and it falls to 12 or 15, when it rallies back up to 20, what do? Most of it, hey, I'm back near my price, I'm selling. That's overhead supply. Tremendous amount of overhead supply in cloud computing, and it's a lagging group. Leave it alone for now. Dow Jones Internet, lagging group. Technology, leave it alone. IBD 50, lagging. The IBD 50 stocks, that's the proxy of the innovative leaders in the market, okay? And sector leaders, it's lagging at this point in time. Gold miners, lagging. Junior gold miners, lagging. Gold, a little bit stronger. This one's a little bit stronger now. Look at this. Isn't that interesting? So notice I have a price alert set on this. I had this set on Friday. If it starts to take out these highs on really heavy volume, there's potential. That could be an investment. Cybersecurity, lagging. Leave those stocks alone. Biotechnology, another biotechnology ETF. What does this tell you? Leave me alone. There's nothing good with me. Just move on. You have a limited amount of money and a limited amount of time. Let's put it in places where we got a bit of potential of making money. Online retail, lagging. North American technology, lagging. Okay? Medicine, lagging. Mid-cap, support on the 200-day, below the 50-day. It's lagging. There's not a lot of power there. A lot of selling volume there. Okay? Home construction was leading, lost some leadership here. It's below the 50-day. Needs to get back above the 50-day, folks. It's that simple. S&P 500 growth, below the falling 50-day, does have a higher low. That's one plus. This low is higher than this low. Needs to start demonstrate some power in lifting back up. Okay? Small cap, lagging. Airlines, lagging. Regional banks, leading, which is why we're involved in stuff like that. Okay? There you go. Biotechnology, another biotechnology, lagging, leave them alone. Mid-cap, lagging, leave it alone. Meta Universe, lagging. There's a valuable lesson here. When something looks super hot, know that eventually it could lose its luster, and it did. This thing lost a lot, so be careful with that. Oil services, and this is why we're involved in energy stocks. We own some energy. This was telling us when the market's just getting cracked all over the place. Take a look at this chart right here, okay, on OIH. Now, look at this. Spiders, lagging. OIH, leading, strong, which is why we've been involved in oil stocks, energy stocks, oil services. Oil, look at that. Birds of a feather flock together. Check it out, oil services. Oh, that's doing pretty good. Gosh, I wonder how oil's doing. Oh, surprise, surprise. It's doing good too. There we go. We're strong back here, which is why we were involved in energy things. Online retail, dead. Nothing going on there. Infrastructures, it's lagging. There's no real leadership now. It was leading at one time. Now it's just going sideways, nothing about it. Software, dead. Look at this, dead. Nothing to do with it. QLD has a higher low, but it's below the falling 50-day. This needs to start showing some strength, folks. It really needs to get back above the 50-day, the green line. That would be good. What's 1 plus? It does have a higher low, okay? But it's below a falling 50-day. Remember that. Higher low, below a falling 50-day, okay? Well below a falling 50-day. Inverse, there's really nothing good with it. It's QQQ, same thing as QLD. Move on. Retail, lagging. Cloud computing, another cloud computing ETF, lagging. Nothing to do with it. Silver, below the moving averages, lagging. Steel, some life, but it's below the 200-day. Not a lot of power there, folks. Semiconductors started to lift and reverse down on Friday. It needs to cut across these tops. This is a nice top here, by the way. I'll draw this for all of you. We'll just do it like that. Can it demonstrate some power there? Now, let's take a close look at this. This will be a good education for everybody. Every price and volume bar talks. Some are more important than others. You see that bar right there? Look at the selling volume on that bar. And then it kind of rallies around. And then look at the selling bar here. What does that tell you? Semiconductors. Be careful with them, okay? There's a seller up there. There you go. That's power for you. SOXL, same thing, another semiconductor ETF. Spiders, higher low, much closer to the 50-day. Volume pickup. So here's the spiders, okay? Here's QQQ, apples to apples. NASDAQ 100, S&P 500, non-leveraged. Close to the 50-day, higher low. QQQ. Higher low, well below a falling 50-day. Did you see this? So go back to the spiders. Approaching the rising, slightly rising 50-day. What's stronger? The S&P 500 is stronger than the NASDAQ. There you go. There you go. SSO, similar situation. Note the volume pickup. Okay, so that's something to consider, the S&P 500. Continue on. Solar, burnout. Nothing there. I had to say it, I'm sorry. Dad humor. Small caps, lagging. Nothing to do with it. Uranium, no, nothing there. Even a Geiger counter wouldn't count anything on that deal. Oil, another oil. Look at this. United States oil hitting highs. And it has been strong. Look at this. Do you see this trend right here? I'll do something for you. Watch this. This will help you. These are the things we do in Mission Winners. What's it doing there? Gosh, Pat, kind of looks like it's going up. Yeah, you get the gold star. Here we go. You ready for this? This is kind of going up. Let's look at QQQ. What's it doing? Well, Pat, it looks like it's been going down. Yes, good eyes. Here's spiders. Chopping around a little bit, but more leadership than QQQ. There we go. Let's continue onward here. Solar, small cap, uranium, just restart. There's the oil. See that? United States oil. Aerospace and defense is just chopping around. It's below the falling 200-day. Leave it alone. Home builders was strong and it's lost power now. There's nothing to do with it. Materials is hanging in, but there's some serious selling here. Be careful with that. Energy. Oh, gee, look at that. We've talked about that. And again, what are we heavy in? Energy stocks. Okay? And it was telling you. Again, here's XLE. Take a look at it moving up. Here's SPY. What do you see? Chop, trend. There we go. XLF, kind of grinding up here. Got hit a little bit, but didn't close bad on financials. Okay, there we go. Industrials is chopping around. Needs to get above these tops, but it's kind of loose, all right? Technology has a higher low, but it's below the 50-day. Needs to get back above the 50-day. Got to be cautious. Consumer staples is hanging in. Consumer staples, that's good. By the way, staples, okay, necessities, hanging in. Kind of a defensive type of sector, right? There you go. Utilities, kind of a defensive sector. It's hanging in there. There we go. Consumer discretionary, stuff that's not necessary. It's lagging. Tells you the consumer's pulled in their belt a little bit. Metals and mining's hanging in. Needs to get above these tops. Not bad. But note this. What is this right here? This is a great lesson. Every price and volume bar talks. Open, high, low, close. Look at the open. You see it right there? And it runs up and closes below where it's open on heavy volume. That's not good. Gaps up, runs up, closes near the lows of the day on less volume, but still another tail bar. Tail bar here, tail bar here. It needs to get above these tops before anybody would be interested in it. There you go. That's simple. Retailing dead. There we go. Software dead. So let's continue on with the max list. Here we go. First stock on the list. What do we have here? Apple has a higher low. There's a shelf right here. If it could take this out, this was a great run for us. We bought right here. See the clean and simple base? We have a higher low here. It needs to start pushing above these tops and do it on good volume. We'll watch it and see what happens. Take out the high of this bar. High on this bar is 176.62. I've got it marked. All right, something to watch. What's it going to need? A good market and good price and volume action. Amazon has a higher low. This low is higher than this low. But note, this low had heavy volume. This higher low has less volume. It's below all the falling moving averages, except the 200-day still flat. 50 days falling. This would be an extremely aggressive entry here. So here's a lesson for everybody. Let's suppose you decided to buy this higher low. All right, this is the real world, by the way. This isn't textbook. It's a higher low setup. It's a max list stock. Take out today's highs. There's a potential buy. I'm not telling you to buy it. I'm just telling you the strategies and tactics, sharing these with you. Things I've used for years. This low is higher than this low. It gapped down and closed near the highs. What's one negative, another negative? This would be a much better pattern if the volume was heavier, but it's not, okay? It's below all the moving averages. You've got to be careful with that. So let's suppose you really had a hankering to buy it. How could you do it? Here's the strategy and tactic for you. This is the real world, not textbook. That's easy for me to say. It must be Saturday. If this takes out today's highs, Friday's highs, that could be a buy. But no, the volume wasn't that heavy. But we always have to consider risk control. One of my deals is this, and again, I periodically taught outdoor survival skills at high elevations, okay, over 10, 12,000 feet. You always have to have a plan, and you've got to know the plan before you need to do the plan, all right? If you bite this, taking these tops out here, if it takes out the lows of this bar, you've got to sell 1/2 of your shares because you're wrong. At least 1/2. If it keeps falling, you've got to sell the rest. Keep losses small. There you go. That will help you. That's the real world, okay? That's being in the thick of it. Alibaba, it's below the falling 200-day, folks. Just leave this alone, okay? You see the 200, I'll do something for you. There's nothing good there. There's nothing. Just leave it alone for now. That's simple. Same thing's true with BIDU. There's nothing there. Leave it alone. Facebook's just going sideways and still shows some more life, pushing preferably above the 200-day. All right, that would be nice. OnePlus, slight volume pickup on Friday, but it's choppy, folks. You'll ask yourself, you know, most of you, and I respect you for this, have studied charts and read books about chart reading. Have you seen this pattern anywhere else? You know, saying this is it. This is the cup in the hand. No, you haven't. It's not there. Leave it alone. Google, same situation, just loose and choppy. This is called wide and loose. When you see it, wide and loose is indicative of high investor emotions. Team, I'm going to share something with you. High investor emotions and good investing are mutually exclusive, okay? So that's fancy statistics talk for those that didn't know, but anyway, that's a different story. Okay, Goldman Sachs gaps down, closes down below it. There's nothing there. It's below the 200-day. Fell in volume. Move on. MasterCard, possibly. Push across these tops. Look at the weekly. You can say, oh, maybe there's a cup and a handle here. And I'll draw this for you. Go back to the daily. Take out the tops of this bar right here. These bars here. Needs to do it on really heavy volume. Okay. This is not a slam dunk setup. Be aware of that. Microsoft is dead. There's nothing good with it at this point in time. It was good here. We owned this. Note the clean and simple base. Look at this base. Look at this run. Sells in a straight. This is where money is made. Now compare and contrast it to now. How's that look to you? I'll shrink it so you can see the whole thing. How's this versus this? Looks a little different to me. There we go. Continue onwards. Netflix is dead. By the way, I need to pause here and share something with all of you. Earnings season's coming here, okay? We're starting up. This company, Netflix, reports this week. Know that, okay? I can't stress that enough. We're not in this, by the way, okay? It was a great run for us back here, and we sold, and we got out, and it's good we did. Nothing to do with it. Move on. Square, nothing. NVIDIA, possibly if it takes out. It's a high or low setup, but it's awfully loose. It was great right here, okay? This was nice. This is a little choppier. Be careful, all right? Just be careful with it. Tesla was good for us, okay? Had an entry and ran it out, okay? Nothing to do with it now. It's loose and choppy. Maybe it'll start lifting. What could be a potential setup? Pushing back through the 50-day. But note this volume on Thursday. That was heavy selling volume, folks. Heavier selling volume than the buying volume on this bar, this bar, this bar, and this bar. So if you buy it, pushing through these tops, which is the 50-day right here, the green line, if you buy it, just have a plan to sell in case it doesn't work. There you go. Not really clean and simple. Twitter, the tweets ain't working. Visa, just like MasterCard. Anyway, that's a MAXLIST overview. These are the big franchise name stocks. And money, big money can be made in these stocks at the right time.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.